Lothar Mentel is Chief Investment Officer at Octopus Investments, and he has 2.5 billion sterling under management. Lothar, thank you so much for coming in today. All right, so yesterday the markets gained. It was, finally we had the political will from the European Union. Now I guess there are two main questions. We don't really know if China is going to invest in this EFSF. We don't have the details. And then on top of that, we don't really know if the ECB is going to continue buying bonds. What is the one thing that actually will make you change your portfolio? What worries you the most in this scenario?
Whether the sentiment, the positive sentiment that we have since yesterday will stay, because that is the main thing that has changed since last week. So if I look at the deal that they have announced, it's not really a great positive surprise. All these things were discussed beforehand, and there's lack of detail, but what it has done is it has really shifted the sentiment, and from August onwards it was mostly sentiment that was the problem. It wasn't really the underlying, so the sentiment drove a lot of the negative moves in the markets.
But corporate earnings have actually been quite good. I mean, we've had a very big week for a lot of European earnings, and apart from some of the Electroluxes of this world and saying, people are really watching out how much they're spending, overall the companies are diversifying, they're cost-cutting, and they're going for emerging markets profits.
The corporate sector is the healthy sector at the moment. It is what's still holding up and doing really well. And if I look at the earnings, at the outcome so far, particularly in the US, it's an interesting picture in that the cyclicals and the globally orientated companies are doing really well, whereas the defensives are not surprising quite as much as you would expect if you're really nearing the end of the cycle. So that, for me, is a very interesting insight. However, it has also to be said that any of the negative impact of the euro crisis has not yet fed through into any corporate earnings.
So that will be what, the first quarter of next year in terms of the impact?
Well, yeah. That's when we're going to see it. And there is collateral damage from this European crisis, because the banks have not been very active over the last 2 months, and corporates, particularly in Europe, have stalled. If they had any new plans, they've put them onto the back burner for the time being, and that's not going to be good for the economy overall.
So, Lothar, what is actually your worst-case scenario? Because I know, sometimes we talk about a possible credit freeze, about the continuation of this banking crisis, and then there are days where actually we forget about it and the market seems to forget about it. But if that happens, is that really what's going to impact a lot of the equities, and does that mean that you'll have to keep a lot more cash as opposed to equities?
The worst-case scenario is that all of this unravels again, so that the European politicians get onto each other's throats again. The Italians don't cut their budget deficits. They're not really making any strives to get back onto the growth path, and we get back to where we were a couple of weeks ago. That's the worst case scenario, because then the banks are weakening and we've got a major problem. But compared to where we were, it is now clear that the politicians have got it. There is a will to solve it, and there's lots of ideas and plans of how this could be done. And if you're offering the right sort of returns to the Chinese, and even to the fund management world, to the fixed interest managers, I see quite a possibility for more engagement in the EFSF from outside just the government.
And so, Lothar, talk to me about your ideal portfolio in the next couple of months. Is this too short-term, months? Do we have to talk in years, or do you have to take it step by step? It
always depends on what your specific objective is, and if you've got a very long-term objective, then yes, there's still good value in the market. On the shorter term, we're cautiously optimistic, but we're still a little bit defensive. So we never went really massively equity underweight, but for slightly more defensive managers and exposures, because this can still go either way. I'm very encouraged by this change in sentiment that we've seen since yesterday, but I remain cautious because this peace, this truce, is a bit brittle. Yeah, prudence is probably the best. Lothar, thank you. Thank you very much.
Lothar Mentel, the Chief Investment Officer at Octopus Investments.